Palisade Radio is preparing to release an in-depth report on the fundamentals of uranium, including our top 3 picks for 2019. Sign up today at palisaderadio.com to be the first to receive our exclusive report.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. We're back for part 6 now of our 10-part uranium special. We've had several great guests on, and if you're tuning in for the first time, definitely go back and check some of those out. We've had Mike Alkin on the show, we've had Marin Katus on the show, and we've had George Glazer and Daniel Major, and now for part 6, we have Lobo Tiggre back on the show. Lobo is the founder and publisher of Independent Speculator, which can be found at independentspeculator.com. Lobo, welcome to the program.
Thanks much, Colin, and you get kudos for not calling me Louis. Everybody remembers the Louis James name, and it's hard for them to transition to Lobo Tiggre, but in interest of transparency, we're trying to go with the real McCoy. So hats off to you.
Well, it wasn't an easy transition for me. You did stop by my place in Puerto Rico a couple months ago, and we had some lunch, and it was a slow transition getting the name right, but we're there now. So here to discuss uranium, and this is a topic that, even though it's a very niche market, a lot of people are interested in, and a lot of people are liking the action that's starting to play out and some movement in the stock. So let's start on the fundamental side, Lobo, and where do you see the uranium market at today?
Absolutely. I want to comment on what you just said for a second, because people should pay attention to this. This is territory of 10-baggers. Everybody remembers the phenomenal amounts of money that investors who were early in the last big uranium bull, which went roaring up from $10 to $140. And then even the subsequent rises. This is a market sector that, because it's niche, as you say, there are relatively few players in there, and the ones that have quality assets, they get a lot of attention, and their share prices go up by large multiples of the underlying commodity. So if uranium goes up X percent, the quality uranium companies, they tend to go up 5X% or 10X%. It's really phenomenal. So I think anybody who's suspicious of uranium, or maybe even has an ecological or ideological reason for not liking uranium, if you're an investor, put that aside. That's not relevant. What's relevant is that when this market moves, it moves mountains, literally in the case of mining, and figuratively for investors and speculators. And I think that's what the fundamentals are telling us now. There's really, people have to understand that very large parts of the world absolutely must have nuclear power to keep the lights on. There is no alternative. And even the United States, it's 20% of our baseload power. You can't replace that overnight. Even if you wanted to switch from uranium to some other kind of nuclear power, like thorium or whatever, that would take years, probably decades, and that hasn't even started yet. And I'm a big believer, as you know, in the new energy paradigm, and I think the battery and solar combination is changing that equation. But that, too, is a decades-long process. So the fundamental fact of this market is that uranium is not substitutable. It must be mined, and it can't be mined at current prices. Even though we have seen some increases, it's still less than half of what most market analysts say we really need to incent miners to get going here again. So that's the fundamental reality. And even the sell-off post-Fukushima and other things we've had, they don't alter that reality. They've certainly impacted the market. They've changed things. But the fundamental reality is we have to have uranium as is. And at the same time, the Chinese are going gangbusters. They've gone from a handful of reactors to almost 20. They're building scores more. India won't be far behind. They have the same issues with pollution that needs to be cleaned up. Even the Japanese apparently have stopped selling their excess uranium because it's no longer excess, right? They shut everything down after the tsunami disaster, but now they're on the record for restarting 30 reactors. So they're not really the sellers that they were before, and we see that in the price action. So the fundamentals here are all absolutely very strong, and this is one of the few things that I'd really be willing to pound the table on to say that, as our friend Rick Rule says, this is absolutely a when, not if question. And in my opinion, the when has got started, And we see that in the price action, and people need to get on board if they want to ride this train, because it's one that has shown the capacity to deliver spectacular results for investors.
And Marin mirrored many of the same things when we talked with him a few days ago, which is, let's take the worst case scenario and see what that would play out in terms of what price of uranium it indicates, how much uranium is needed. So that's definitely important to look at, but also talking about what do you think the realistic outlook for uranium is, and you touched on it a bit, but is this a positive story? Is it a growth story, or is uranium price going to go up just because it has to, even though nuclear is not a growth industry necessarily?
Yeah, so as a worst case scenario, uranium still has to go up, right? It's trading at $27.40 a pound as we speak. That is less than what it costs most miners to mine it. And even the famously low-cost Kazakis have cut down their production substantially. And the highest grade, biggest, baddest uranium mine in the world, McArthur River, the flagship asset of Cameco, one of the premier uranium producers, they shut that down. Why would they do that if it's their highest grade mine? Well, because they're depleting it at low prices. It makes no sense. It's better to mothball that and sell the uranium when it's at higher prices than to sell it now at low prices. They have no question that will happen. And they're right to do that. They were right to do that. They are right to do that. But that tells us that the uranium market is already in a squeeze. It is not sustainable at these low prices. And even the lower cost in situ people, even they're not incented to go into production at the current prices. So it still must go up significantly more. I already mentioned Rick, his number is $60. If you look at a lot of the uranium companies out there, they're using a $60, $65 as the price that they're putting in their models for what they need to move their projects forward. We're, less than half of that now. So that worst case scenario is it has to go up. I think it may not go up as much as people want. I think at $30, it starts changing the incentives for some of the lower cost producers. I think at $40, we know there are some low cost producers that have said that they will turn purchase back on at that level. So it might be more of a struggle than some of the hopefuls out there are wishing for. But there's absolutely no question that uranium prices will go up. And there's no question that that moves the prices of uranium companies, their stocks on the market. We've seen that already.
Lobo, I think one of the reasons that commodity investing is so exciting is because you have this overshoot that happens, and you just brought up a good point. The incentive price might be $40 or $50 to fix the problem, but the prices have been low so long that it might cause a reaction that's much greater than what's actually needed, and this happens all the time with commodities. And I find that market conditions end up conditioning us as investors to put a more conservative price on things. So Rick might be saying $60 and you might be saying $40, but all of a sudden when we're at $60, we might say, hey, this could go to $90, and things seem to climb up.
Well, so we were talking fundamentals, and I'm saying that on a sort of fundamental basis, looking at the supply and demand, it may not give you as much joy as you hope. But you're absolutely right that when it comes to the spot price, there's a lot of speculative action there. And prices often do overshoot. I mean, when it went up to $140 10 years ago, that wasn't necessarily a sustainable price as we saw. It wasn't justified, but that didn't stop it from going there. And if this takes off, the market can rocket. And I'm saying that you shouldn't count on it going to 60. There are people that start producing again at 40 or less than 60, but that doesn't mean that it won't go blow past 60 on up to 140 again or higher. If once that momentum gets going, it can go crazy. I don't want to count on crazy. I want to, even as a speculator, never mind as an investor, as a speculator, I want to reduce the risk as much as I can. So from my mind, I want to see people that are companies that have projects that work at lower prices. And then if we get a mania up to a much higher price, great. The prices will go even higher. But they don't need that. I don't have to have some crazy price to win on these speculations.
Yeah, that's a great point. And $40 or $50 uranium could cause a lot of 10-baggers in the space as it is. So we don't, like you said, we don't need to have those higher prices. Let's talk about a bit more on the technical side, and that's more timing of when things are going to move, and just looking at kind of the patterns that have been playing out. We had an initial bottom in the uranium price and many of the stocks over 2 years ago, but being that this was such a long bear market, these bottoms and these bulls take a long time to form. How are things looking for you now?
Sure. Well, I'm more well known for being a fundamentalist than a technical analyst. But my technical friends say that when you're carving out a bottom, whether it's a long bull or not, what you're looking for is a series of higher highs and, most importantly, higher lows. And that is exactly what we've seen since the bottom in early 2016. Now, there's been spikes before, if you will. There's been rises, and then they fizzled. So I can understand why people are worried. Well, how do we know this rally won't fizzle as well? Well, my answer to that is you don't. Any rally can fizzle. But if you are seeing a series of higher highs and higher lows, which we have, right? Each trough after the rally fizzled was higher than the previous one. And the most recent one, we went from 27.40 down to 27.35. The market only retreated a nickel before coming back up again. Now, we'll see whether it goes up from now or down again. But if you count that as a higher low, which technically it is a much higher low. This is extremely bullish. It's a very strong signal that this is a market that wants to go higher. There's certainly people that are interested. I mean, you and I are talking now because investors are asking about this. My readers are asking me about uranium plays. Is it safe to get back in the water? And I'm sure your listeners and people in your financial world are asking the same question. I have gone out publicly and said, yes, I think the time is now. I said this a couple months ago. And I am looking at several uranium companies that I'm interested in speculating in. And I've already made some initial moves in that market. So for whatever it's worth, I can tell your listeners, viewers, that I am putting my money where my mouth is. I have, I didn't participate in the earlier rises. I was skeptical. I was watching and waiting. But now I've decided to go ahead and buy it. I do believe the time is now, and it's still just beginning.
Well, you have a paid-for subscriber base, so I don't expect you to give the cards away for free, and hence I'm not asking you to give away your top uranium pick or picks, but from a general standpoint and people looking on their own, there's maybe 30 to 50 public issuers out there right now available. Either what should they be looking for, or depending on their risk tolerance, what should they be looking for?
Right. Well, you're being very polite. I'll go ahead and throw some names out there, some freebies for folks, because they're quality companies on this front. The two obvious front runners, sort of market darlings for the exploration space, which has so much potential to multiply the upside in the commodity moves, are going to be fission uranium and next-gen uranium. They both have relatively near surface, extremely high-grade uranium deposits in Canada's Saskatchewan's Athabasca Basin, which is where McArthur River was that we were discussing before. It's a premier mining region. It's mine friendly. You can permit and build mines there, even uranium mines, as scary as uranium is to so many people. And so these are big, high-grade discoveries. They're obviously going to go forward and become mines at some point. And both of these companies have already shown that they are responding to higher uranium prices today. So those are places to look. Examples like that I think are good. But I'll go one further for you and offer your readers or viewers something else to think about. We talked off camera before about vanadium. I'm also bullish on vanadium. I think it may have risen a bit too far too fast, and we may see a near-term correction. But the vanadium story is very strong. And I'm mentioning this now, even though we're talking about uranium, because there are a lot of deposits that have both of these metals. They often do occur together. And there are companies that have a vanadium credit to their uranium story. I think that's very interesting. If you're a uranium bull but not sure about vanadium, well, then you can get upside exposure to vanadium in a good uranium-vanadium property without worrying about whether vanadium is going to stick around or not. So that's something I encourage your viewers to look into.
Yep, very, very interesting. Lobo, I can't thank you enough for coming back on the program. Once again, Lobo is the publisher and founder of Independent Speculator, independentspeculator.com. Any final points to make to our listeners?
No, I would just reiterate that I believe what I'm saying. I'm putting my money where my mouth is. And of course, people are welcome to come and sign up if they want to find out what I'm doing with my own money. And thank you very much, Colin.
All right. Thanks so much.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?